Good afternoon all. I know we are running late, but it's a pleasure and privilege to be here amongst yourself. Riyadh, you have made my life very difficult, to be very honest. It's a continuing session about the same value creation and the role of finance and CFOs. So before starting the session, I would like to reiterate the message about what Riyadh just mentioned. CFOs in today's world are not gatekeepers. They are strategic enablers, as you said. They're balancing aggressive growth and maintaining cost efficiencies. And liquidity is, I think, it's fundamental for a CFO role to manage. All this they do while navigating ever-changing environments. The financial landscape is increasing day by day. It's a rapid change, and we have seen this and we have witnessed this in the market. So today's panel is about balancing growth, liquidity, and cost efficiency through financial innovation. And we'll explore how CFOs are driving business growth without compromising the financial health of the company. And we'll talk about how they are optimizing liquidity in uncertain times, because we have seen post-COVID, they've massive changes in the ecosystem that definitely CFO has to lead from the front. And then we also talk about how CFOs can leverage technology, for cost efficiency, to have sustainable cost efficiency that we just discussed. So what we have done is that we have structured our discussion into 4 segments. We talk about the growth strategies, we talk about the liquidity optimization, and then we'll discuss about the financial innovation. So without further ado, let's dive in. I will start my segment 1, which is growth strategy, without overextending financial health. So in this, we'll discuss how CFOs balance ambitious growth while maintaining financial stability and aligning capital allocation and with long-term value creation. So the first question is, I think, Ron, if you can take it. Unfortunately, our colleague is not here, so I would like to stress on that. So CFOs are increasingly seen as business strategists. So how do you balance aggressive growth, ambitions, and financial prudence?
First, I would like to thank NetNext for organizing this event. I would like to go back to Riyadh, right? About what he said, and this really reflects our industry now. And I would like to also welcome Shahnaz, who's the only lady with us in this room.
Yeah, inclusivity is very important.
And there is another lady, my apology. But I think we need to have transformation in general in terms of this industry and gender diversity in this industry. So this industry is not only for men, where you see in the HR industry, it's all women. Yeah. So we need to have more men in the HR industry and more women in the finance industry, and this actually helps in transformation. And I think it incorporates diversity, because at the end of the day, you need to have these ideas in order to actually go for the future. Now, in terms of your question specifically, there's no doubt, and especially I will talk about a little bit about my experience and where I am now, where you are working on long-term projects and mainly governmental projects. It's very difficult not to think on the long term, because any impact or any decision that you make today could impact the project life over the next 10 or 20 years. And that's why you need to be really careful in terms of the decisions. And when you are making these decisions, it should not be at the current stage. You need to count for the impact for the future. So it's very important to look at how the decision, and he has mentioned stakeholders, which is a key point, not only shareholders, how it will impact all of the people who are impacted, whether the community, your client, your employees, etc. So really, what Riaz has described is basically summarizes really how CFOs need to look for the future, because it's essential to not make decisions and think about decisions today.
No, I think wonderful. Thank you. I think you touched base upon gender diversity. It's very important, fundamental. So on a following up note, how do you align capital allocation with long-term value creation while managing, as you said, it's not just long-term, we have to manage the short-term goals as well. So how do you manage your capital allocation? Any insights?
It's always essential, capital and innovation, typically, and specifically when we talk about the old definition or the known definition of capital, and typically when we are talking, it's whether we invested in assets or we invested in long-term investments, etc. We never thought about capital in terms of innovation, and here I want to focus on one main thing, which is really human capital, because that's what drives innovation. And although we'll talk about this, I think, in the next questions of the panel discussion, although we are in the AI era and digital transformation, but the human capital needs to remain, and we need to invest in our capital, in the human beings, in the intellectual property, because that's what drives innovation. We should get out of this typical structure of capital investments related to assets and investments and buildings and how we put it in stocks and whatever, and returns, etc., and start thinking about innovation, about people, and how we create value. We create value for the company. When he's put this example of Blockbuster, I spent almost 12 to 15 years living in Canada, and I used to go to that store around the block. I go now, I don't see that store anymore.
Yeah.
So this is typically, value creation and innovation. No one thought about this at one point of time, and this is the result, 250 billion versus zero. So really this mindset has to change. We cannot work in the old mindset that we have been working with.
Yeah, thank you. I think this is very important for value creation, to talk about value creation. Do you think how we can optimize our forecasting, our efficiency, how do we overall optimize the business the way we see it, how we create value, So do you think that budgeting tools can help around that? Would you like to take it, or Shady?
Sure, I will take it, and he can take it after. Not a big deal. When we talk about forecasting, and most of us here in the room, we always look at the history. Okay, we always look at the history, and then we put our Excel sheets, and if we did some financial modeling course, we are better than our colleagues somehow, because we use some Excel tools and to automate this process more. But effectively now, you can go on the chat GPT and ask him, where am I going to end in 5 years?
Yeah.
So we cannot be away from what is going on. And we need to use trends, we need to use forecasting, and we need to use artificial intelligence.
Yeah.
How? We need to start incorporating it into our day-to-day business. It's a big change for us, and I will talk about this later on. But we cannot distance ourselves. We need to use what's available, try to use the easiest way to incorporate it to our systems. But we cannot only base ourselves on the history. We need to predict, we need to think about what could happen in the future, what could impact our day-to-day operations. Who thought about COVID and what happened with COVID?
Yeah.
Right?
Sure.
Large organizations were gone. So we need to have disaster recovery, business continuity plans. We need to have proper insurance in place. We cannot only, These are the numbers, we inflate and then we go on and life is good.
Yeah, yeah.
So that's my take into this.
This is very good. I mean, you talk about the uncertain time, and thank you for that. I think it's also important to manage the liquidity, you know, especially in uncertain times. So, do you think how we can do working capital optimization in uncertain times, you know, when you are not aware how things are going to be?
Of course, no, it's a very good question. Let me start by introducing myself. I think I'm the only one that doesn't have a,
yes,
and there is a reason for it. So, I worked in spending efficiency in the last 8 years between private sector and the public sector in multiple government entities as a consultant and also as an employee with Expro, which is the government entity that is mandated to do spending efficiency across all government entities. I don't have the company name or the organization name because I'm in the process of moving to another organization, which is one of the PIF subsidiaries. I'm going to be leading spending efficiency department over there. So I didn't get their approval to put the name, and that's the only reason. Okay. Back to the question, yes, I can speak from experience now. Thank you, Mr. Riyadh, about explaining the Vision 2030 and the ambitious objectives of the vision. And in order to do that, the government already knows that they need to allocate budget for these ambitious projects. And to do that, not only have the enough funds, but also make sure that the spend is efficient. And I'll give you an example of a government entity. That's something I worked on in my previous job. We identify a few opportunities in government entities where they procure different IT products or stationaries or other different products that every government entity is buying the same product with a different price.
Okay.
And that is a huge loss for the government. So what Expro did is they did framework agreements on behalf of every government entity and reached out to the private sector. They said, no government entity will buy from you unless you are part of this framework agreement. And we will only take 75% of the companies, okay, which means they have to compete with prices and high quality. Now, as a result, a lot of companies, of course, applied. Government are getting the products that they need with a very low cost, and also they don't need inventory because they can go to the system, which is the e-market, the government e-market. They order their products, get it within a week or two. So increasing the efficiency, reduce the cost, all in one different creative idea, creative solution. And I think across the board, you can think of different opportunities how you can increase the efficiency, and then you find the right tools for it.
Super, thank you so much. I think this, you reflected about spending efficiency, so this is really going to impact your working capital, you know. So how do you see managing the working capital in unprecedented times? For instance, you talk about growth. We are going through unprecedented growth over the years. We're talking about 2030 vision, 2040 vision. So how do you, because at the end of it, it's all about liquidity, right? So how do you see yourself, or how CFOs normally manage cash flows?
I think this is speaking a little bit about spending efficiency role, which is quite new in the government. The government saw that CFOs are focusing on all the objectives that Riyadh mentioned before. However, spending efficiency is not one of them precisely, okay, or they don't have the capability to do it. The difference between spending efficiency and cost optimization is that we get the maximum value of our spend. So if we spend 2 million, we get X. Now how we can get X plus with that 2 million, or we get the same X with less than 2 million. So they created this new role, which is ideally not reporting to the CFO, okay, where they need to do, I mean, they have a lot of roles, but the main three things is spending efficiency exercises on the current spend. Second, understanding the new projects and making sure these projects will actually help and support the overall objective and strategic objectives. And then finding different alternatives, how they can implement these projects with a smaller scale in order to test and pilot these projects. Okay. So therefore, you can have space and allocation better than just throwing the budget on different projects and then seeing maybe it works, maybe it doesn't.
Fair enough. Thank you so much for the update. I think this opens discussions around, because we're talking about spending efficiency, working capital management, liquidity management. So I think tools, AI, you know, it's very important. Shahnaz, would you like to touch base upon the role of automation in fintech partnerships and a shared service model? Because this is very, very much related.
Yes, thank you for the event to invite me here today. I am Shahnaz Alkhamis. I'm CFO for Altakamul Agriculture. Go back to your question. I think before answering your question, let's talk about the automation. Several years ago, I think when the companies decided to go with the automation and automate some tasks, they faced challenges and resistance as there was a fear among their employees that the companies will replace them with a machine. So now, if we will realize that the automation and using a technology reduce the cost and also reach this to grow our business faster and also open new opportunities. Before it was just the companies was using the automation just to reduce the manual errors or human errors, but in fact it's increased the valuable time for the expertise to use it in strategic tasks. And today I'll talk about the recent partnership with one of technology companies called Arabio, which has impacted our financial statements positively. So they provide us a products and this product is automated the accounts payable. Basically, it's the integration between our accounting system and the banks and automate all the transaction, the accounts payable. That's enroll the suppliers network in dynamic discounts. So, the suppliers will be able to get their cash in the time they need it, and in exchange they will provide the buyer discounts by getting it's like a prepayments discounts if we want to simplify the word.
Early payment discount, yeah.
Yeah. So this impacted. This will go to the top line of the income statements and will decrease significantly the cost of sales. So this is one example of the huge examples in the market, the products and system that can be used and increase the efficiency and also decrease the cost of sales.
Super. Thank you. Thank you so much for this feedback.
You're
Let's go and talk about CFOs as champions of financial innovation. I think this is. I would request Ron if you can take this one. With digital transformation disrupting finance, how are the integrating AI, blockchains, and alternative financial matters into strategy?
First, I would like to go back to, I really like the presentation of Riyadh.
Yeah.
So, and I did not introduce myself. I work in the transportation industry, and the company I work for is into metro operations. So we operate the Riyadh Metro. And we work with all the government entities, and I want to go back into smart cities, which is something that is a new word now, okay? And again, we end up being CFOs in making discussions about business options, and we are into these discussions with the governmental entities and in some cases here in Saudi with all of the local governments in terms of how we bring these cities into becoming smart cities and investment of new technologies in transportation, etc. So here, that's why, again, we talk about artificial intelligence, innovation in terms of all of our product lines to actually 20 years ago, you did not have driverless trains. Now you have driverless trains. So effectively, this is where the industry is going. Now, when it comes to specifically to the actual finance function, we need, again, and as Shahnaz said, in terms of the resistance to change. Of course, when you have accountants, when you have receivables people, payables people, etc., and you now need to introduce some AI tool into your financial structure to optimize your forecasting process. And again, we're used to the typical, VBA Excel sheets. So you need to, and in some cases there is a resistance. So you need to try to actually show the benefit of these tools, and again, not show that people are being replaced or that this tool will never be able to do the job of that person and basically replace that person. And really invest, and this is what I always push with the team, is that you need to get out of the box. So if we are introducing these tools, we are introducing them to your benefit to do your job more efficiently and effectively be able to do other things in innovation, etc. Because the demand, as it has been showcased before, is totally different now. The bookkeeping and the tax filing and all of this, you can subcontract it if you don't want to use, AP tools or etc. So we need to show the benefit of introducing new technologies related to artificial intelligence into our functions. Also, when it comes to payables, receivables, there is a lot of tools that can actually help you in forecasting your deficiencies in collections. So we need to benefit from these tools and input them into our day-to-day business, because again, we cannot distance ourselves from them.
Thank you, Ron. I think it's very interesting about what you talked about, the barriers in implementing technology. People is one of the biggest, let's say, setback, unfortunately, because their understanding on what is happening is...
And we are like that too, We're not, with all respect, but we've been in this industry for more than 20 years. Also, change is not easy for us.
Sure.
Okay, when I was asked to actually choose a topic, I always try to choose these topics that get me more close to innovation and AI, etc. Because also we are busy on a day-to-day business basis, and we are busy with our financial operations on a day-to-day basis, and we forget about ourselves and how we need to develop and optimize our operations. So that's why also we have some I don't want to say laziness, but at least it's not part of our priorities, and we cannot continue like this because someone else will come and will be ahead of us. It's simple.
Yeah.
So we need to have it in us, we need to push our teams, and we need to show value. It's as simple as this.
Fair enough. Yeah. So apart from people, do you think, is there any other barrier for to implementing technology?
There is legal barriers, there is compliance barriers, there is cybersecurity barriers. Again, AI transformation, it's not risk-free. So you need to cover all your ends. You need to cover from a legal point of view. When you are working on a new platform, how does it link to government platforms, cybersecurity-wise, attacks, etc. And it's not only on the finance side, because even in your business's processes, I'm also compliance officer for the organization. So how do we make sure that our business is actually being conducted in a compliant and a regulatory under regulatory norms? So it's very important also to make sure cybersecurity, legal requirements, compliance requirements, operational technology also. So yes, there are barriers, but you need to make sure that all the stakeholders, the stakeholders he's mentioned, are aligned in order to be able to implement and enforce.
Thank you, Ron. I think this was very interesting. Before we conclude, because I understand, we're running against time, can I take a keynote from every one of you about how do you see as CFOs future of finance? What's going to be future of finance compared to where we are now versus next 10 years?
We'll start from...
I think everyone should be proactive. and make sure that we are ready for anything in the future. And I will bring an example with the customer behavior after the COVID-19. It's changed dramatically because, 90% of our shopping is through online. And most of the shops increase their revenue through the online shopping and decrease their cost by decreasing the locations and cost of employees and also the rents. So I think the best thing is to be proactive, doing analysis, checking the market and the customer behavior.
Thank you. Thank you, Shahnaz. Shady.
I think since I'm not a CFO, but I can speak on behalf of some CFOs,
Sure.
especially in government entities. I think the main objective, I think like Riyaz mentioned it a little bit, that creating value is the #1 objective right now. I can add to that because allocating budget to projects that support the overall strategic direction of an organization is the #1 goal. And that cannot be done by just crushing numbers on Excel and so on. No, you have to understand the project, you have to understand the operations, you have to optimize the operation, and that requires a different skill set. Either you can use technology and AI to help you with making the right decisions, or you have to get engaged into the business itself to understand how things are run, to help them make the right decision. And I think the CFOs will have a huge role in driving organizations in the future within that sense.
Thank you, Shady. Ron?
I think if you go on Google now and you do, first I could not agree more than what my colleagues have said. And if you go on Google and say what is the future of CFO 20 years ago, and what you see now, it's totally different. And how many CFOs have actually taken a CEO role in organizations, and how many, and what was the rate 10 or 15 years ago? So I always call it a finance business partner, this is the key, is actually understanding the business. Bookkeepers, you can get bookkeepers, you can get whatever, but how you are able to make wise financial decisions, you need to be close to the business and understanding the business. And that's why you are getting to see now more people, it was the typical, you don't need to be a doctor to manage a hospital. You don't need to be a pilot to manage an airport, right? But before you had to be a doctor to manage a hospital. So now CFOs are being seen in the industries because they are being close more to the business, and they are actually doing better than the typical engineers and the typical doctors, etc. Because if they play that role of finance business partner and understand the business, they will have the legal mindset because they are exposed to all of the tax and legal matters, the commercial mindset, because again, when they are involved in evaluating tenders and opportunities, etc., they have a full verse of the organizations. So if the CFO goes that route, there's a bright future for CFOs, in my opinion, and you'll see more CFOs in top positions than you have seen in the past.
Sure, thank you. I mean, you're very right. CFOs are co-pilot to driving growth of the company.
But again, CFOs should not stay co-pilots. This is where the trend is going, and this is what we should push. We are not the co-pilot who helps. We should actually strive to be the pilot.
The pilot itself.
That's the main message I have.
Fair enough. Thank you. Thank you so much for our esteemed panelists. Do you have any questions for our panelists? Yes, please.
We have a minute.
Oh, really? Oh, so I have 1 minute, huh? I forgot to see this.
One question.
Hello. Thanks for this fruitful discussions. I totally agree with Ronald. Just I can give you an example. India's biggest telecom industries, TCS, they just changed their CFO to CEO. And you'll be surprised, the company growth in last 5 years is tremendous. because that guy is indebted in the company's whole organizational structures. Many a times we find CEOs being appointed for a short term of 1 or 2 years, but you will not find CFOs being appointed for 1 or 2 years. They are come with the growth from scratch of the companies to that level. I am also a CFO. I also worked with the organization for almost 20 years. So you know the company nerves better. You understand costing, you understand commercial aspects, you understand legal aspects, you understand compliance aspects. So sometimes, many a times I've seen, I've always discussed in various panels also, that CFO is now taking the seat of a CEO. I agree with that, we are not like a co-pilot. We are actually a pilot, and many CFOs are playing the CEO roles. Even I am also playing a CEO roles. So I totally agree with Ronald that yes, it's time that CEOs are taking the seat of a CEO.
Okay, thank you for this. Do we have time or? We're short on time, sorry. So I think we have to conclude this. Thank you so much for your time. Thank you so much for your attendance.